Big Tech Earnings Week kicks off today with Netflix reporting after hours, and upcoming over the next week, the big stocks that are going to be driving market direction. We have Meta, Microsoft, Google, and Amazon all reporting earnings. For those of you who have not been keeping up with Netflix, let's do a quick recap of where they've been and what we're wanting to hear after hours in the earnings report. In the pre-market today, Netflix is trading at $614.50. And just so we know where we're coming from and where we're going, the trailing 12-month PE ratio of Netflix is 51. Forward PE ratio is 35. Now, if you are new and you don't understand the difference between the trailing 12-month and forward PE ratios, if that whole topic's got you all confused, check out the video up above I did for you explaining the difference in the PE ratios. But now with Netflix, let's dig into the numbers and understand why the difference between 51 and 35 and what we're wanting to hear today after hours. For 2023, Netflix reported earnings of $12.03 per share. When we take their price of $613 and divide it by the $12, that's how we get the 51 for the trailing 12 months PE ratio. And when analysts are talking about a forward PE ratio of 35, that would imply a expected earnings for 2024 in the $17 range. We can double check that math by using a tool like stockanalysis.com. Go to the forecast tab and then just scroll down to the bottom. We can see exactly what analysts are forecasting for Netflix 2024 earnings. And sure enough, we see right here in this column, earnings per share expectations for 2024, $17.52, implying a expected earnings growth for Netflix in the year 2024 of 45.6%. Why did I start off this video talking about PE ratios? You might wonder. Because we have this guidance from Netflix that they published at the end of last quarter with the Q1 forecast. And you can see here in the right-hand column that they are forecasting earnings per share this quarter, reporting after hours today, of $4.49 on $9.2 billion in revenue. And to get that $17.50 annual earnings per share, they're going to need to keep up this pace of $4.50 or so every quarter this year. If Netflix can indeed deliver over this last quarter earnings of $4.50 or so, then they maintain a very healthy PE ratio of 35, and the stock should do well after hours when they report their numbers. There is one more thing we need to look at, though. In addition to revenue and earnings, the market is going to be wanting to hear Netflix update on subscriber growth. We can see here in Q4 2023 that global streaming paid memberships was around 260 million. And although Netflix is not giving us a number for their forecast on subscriber growth, analysts are expecting it to be around 5 to 6 million new subscribers added over the last quarter. So there are three things I'm going to be watching for in after hours today: Netflix top line revenue, their earnings, and the subscriber growth. If any of these fail to meet expectations, you could see a major drop in Netflix price after hours today. If they meet these expectations, the stock is going to do just fine in after hours and into the next quarter. Netflix can be a big influencer in the overall market direction, so you want to keep your eye on this one. In addition, as I mentioned at the beginning of this video, we have the other big tech companies reporting over the next week, including Meta, Microsoft, Google, and Amazon. I will try to provide updates on these companies for you guys as time permits as they release their earnings. If you have any questions or comments, please drop them below. I love to hear from you guys. I am Tony Denaro, and I will see ya on the next video.